This is Dr.T Varalakshmi discussing you about the question bank and possible questions to be asked from the Unit 5 of Business Economics and Financial Analysis, that is related to the Introduction to the Financial Accounting and Financial Analysis. Here, there is a possibility to ask the questions related to the concepts like financial accounting, its objectives, functions, and importance, as well as the accounting concepts and accounting conventions, double entry bookkeeping mechanism like journal, ledger, trial balances, and final accounts like trading account, profit and loss account, and balance sheet with the simple adjustments. And financial analysis like analysis and interpretation of the liquidity ratios, activity ratios, profitability ratios, and capital structure ratios, and some of the simple problems related to them, as well as the DuPont chart. Based on these concepts, there is a chance of asking short-term questions, long-term questions, and critical thinking questions. Let's have a look on the short-term questions to be asked from the Unit 5, that is defining financial accounting. Accounting is the concept of recording, classifying, analyzing, interpreting, summarizing, and communicating the financial information of the organization to its users like management, customers, employees, government authorities, analysts, researchers, etc., for the better decision making. That every information, if we explains, that is called as the financial accounting. And explain the meaning of the journal. So journal is a day-to-day book. Here, this day-to-day book is going to be give the knowledge on recording the transactions in a systematic manner based on the three types of the accounting uh, classifications like personal account, real account, and nominal account, and the rules related to the personal, real, nominal accounts. And the pro forma related to the journal is date column and particulars column, and LF ledger folio number, debit amount, and credit amount. So that pro forma and entry meaning, everything we need to explain under the journal meaning. List out the different types of accounting concepts. So dual aspects concepts and matching concepts, realization concepts, time period concepts. Like this, there are 10 concepts and 5 conventions are all there. Then we need to explain about that types of accounting concepts and conventions, and illustrate the meaning of double entry system. Recording the transactions in both the coming and going out way on behalf of the organization's point of view, then it is called as a double entry mechanism, that is classifying the one transactions into debit and credit mechanism, that we need to explain with the disadvantageous levels of the single entry mechanism. And recall the meaning of a purchase book. So purchase book meaning and how to enter the recordings in the ledger accounts, everything that we need to explain. And define the subsidiary books. So subsidiary books, ledger accounts is also called as the subsidiary books. We need to explain this pro forma of that one and explain the meaning of the trial balances. That is trial balances pro forma or the pre-verification of the journal entries and final transaction considerations in the ledgers are going to be verifying under the trial balances, finding out the errors and list out the errors of the principles and what kind of the errors, error of ignorism, error of not considering, fraudulence, all the 5 types of the errors we need to, error of omissions, we need to explain under the principles. And separately, if we write a description about the error of omission or that is forgetting the entry of the transactions intentionally or non-intentionally, that 2 situations we need to explain under these lines of the errors of the omission. And write a short note on the provision for the doubtful debts. So here we need to explain about the for the every organization, if they have given any loans or on credit allowed to the debtors, if they repay in time, then it will be called as the performance assets. If they were not paid, then that assets will be called as the NPAs, that is non-performing assets. So for that non-performing assets, there is two possibilities are all there, whether they can be recovered by the organization or may not be recovered by the organization. If they are not able to recover, then the organizations can't maintain that can't replace that funds at a time. For this one, the organizations has to maintain some reserved funds earlier to meet the any contingencies for this non-performing assets. That provisions we need to mention under the provisions of the doubtful debts. The next thing is, if we see, state the meaning of revenue receipts. So all the receipts or the bills receivables, that situations we need to explain under this revenue receipts mean. And write the meaning of contra entry. So if one thing in any transactions, for example, purchase the goods, and in this one entry might be coming to the organization, another account entry should be going out from the organization. That two opposite natures between the credit and debit elements we need to explain under the contra entry. And illustrate the meaning of the ledger account. Once the journal is prepared, a day-to-day book is prepared from that one, it is summarizing about one particular account, and for the like this they are maintaining for the each and every account separately. Then it is called as a ledger account that we need to explain here. It's with along with its pro forma. And illustrate the meaning of capital expenditures. So that is the amount spending for the long-term activities, and in what where it will be records, that everything we need to explain. That is amount spending on the machinery, land and building, any equipments, etc. We need to write with some of the examples, and list out different types of the accounting conventions. So 5 types of the accounting conceptions are all there. We need to write about that accounting conventions. And write a short note on current ratio. To know the liquidity position of the organization, the manager will take the difference ratio between the current assets to the current liabilities, and its interpretation or the standard ratio is 2:1, or if it is less than to that one, the organization may not be in a position to meet its short-term liabilities. And if it is more than that one, the organization is wasting the funds by just simply reserving them. That one, all that interpretation situations we need to explain under the current ratio. Same as thing we need to explain about the operating ratio. So gross profit operating ratio, net working capital operating ratio, inventories turnover ratios, all these things we need to explain under here. And the debt equity ratios, proprietary ratios, capital employed ratios, like solvency ratios, and the formula related to debt equity ratio, standard ratio, that we need to explain. And overall, the ratio analysis and its limitations, they may ask you to explain about that one. That is a mathematical expression between the two variables of the balance sheet and the final accounts of the organization is called as the ratio analysis. And what is the meaning of the return on capital employed, RCE? That is the total amount which they have accumulated from the in the form of the capital divided by the shareholders returns. If we take, so that formula with the neat explanation we need to provide. And so that is about the some of the questions possibility to ask from this unit 5. And long term questions, if we see, define the financial accounting, explain the importance and the limitations of the financial accounting. So here, definition of the accounting, its need and limitations we need to provide, as well as explain with examples how you would use ratio analysis to understand the financial statement. So which means, so overall importance of the ratio analysis and the financial statements and its types we need to explain here. And define account, illustrate different types and principles of the accounts like rules of debit and credit. So account we need to explain and the three types like personal account, real account, nominal account. What are the examples of what meaning of the personal account? Again, personal account categories: natural person account, artificial person account, person's representative account. Examples: and the rule is debit the receiver, credit the giver. And real account, examples of the real account, and the rule is what debit what comes into the organization, credit what goes out from the organization. Nominal account meaning, examples, and its rule like debit all expenses and losses and credit all incomes and gains. So these are all everything we need to highlight and explain under these types of the accounts. And define double entry system, describe the advantages and disadvantages of the double entry system. So here double entry mechanism, as per the gap rules, what is its beneficiary, when was it introduced, and what are its advantages and disadvantages when compared to this single entry mechanism, how way it is going to be beneficiary, everything we need to provide. And outline the significance of the trial balance and sketch different methods of the preparing the trial balances. So first we need to provide the importance of this trial balance and the meaning of the trial balance with the pro forma, and we need to give the various methods like balance tally method and equivalence method and debit and credit mechanism methods. In all this we methods various differentiations concepts we need to explain. And list out different types of accounting concepts and conventions. All 14 types of concepts and 5 types of conventions with a neat explanation and examples we need to provide under this one. It's a very important concept. In most of the question papers, they'll ask about these accounting concepts and conventions. Once if we learn this particular question, and there we can answer both short term as well as the long term, and critical thinking are also possibility to answer. Next one is summarize the importance of the balance sheet and draw the pro forma of balance sheet and measure involvement. So we need to write about the balance sheet meaning and pro forma of the balance sheet, that is liabilities and assets, the concepts under the liabilities, concepts under the assets, everything we need to explain with the accounting equation, that is assets is equals to liabilities plus capital. Next one. List out the advantages of the journal and illustrate the importance of the ledger. So here both journal and the ledgers we need to explain in detail. And what do you mean by the final accounts? What are its constituencies? Name them and briefly explain the purpose of each of them. So generally the final accounts means trading account, profit and loss account and balance sheet. All these three elements we need to explain in brief. And explain the significance of trial balance and sketch the differences of the methods of the preparing the trial balances. So we need to provide the detailed information about the trial balances and explain the importance of the trading account, illustrate the significance of the profit and loss account. Here we need to compare the trading account, profit and loss account, that is direct expenses consideration is called as the trading account, indirect expenses consideration is called as the profit and loss account, the pro formas of the trading and profit and loss accounts, differences between them, everything we need to provide here. And draw the pro forma of trading account, profit and loss account, balance sheet and measure involvement. So all the pro formas related to these three final accounts we need to produce. And what is double entry system? Describe the advantages and disadvantages. Same as the previous one. We need to provide about the gap rules and introduction of this double entry mechanisms information we need to provide. And draw the pro formas of the trading account, profit and loss account, balance sheet and its major involvement. Explain with examples how you would use the ratio analysis to understand the financial statements. So uses of each and every ratio analysis types we need to provide here. And discuss various ratios to analyze the financial statement. So that is all like liquidity ratios, profitability ratios, solvency ratios, capital employed ratios, operating ratios. We need to provide their importance here. Outline different types of the liquidity ratios and different types of the ratios. Explain. So you see here we need to provide the current ratio, quick ratio, acid test ratio, absolute quick ratios, and the importance of these liquidity ratios. And same answer, like differentiate solvency and profitability ratios with examples. The differences between the solvency ratios and the profitability ratios and their importances we need to provide. And explain the accounting cycle with an example in detail. That is from journal to balance sheet. So how to prepare that one? What is its need? Recording, analyzing, recording, classifying, analyzing, interpreting, summarizing, communication. All that procedures like accounting functions we need to explain here. And classify the difference between capital expenditure and capital receipts. So we need to explain about what is the capital expenditure and the capital receipts, the difference between them, what are the situations for the capital expenditures, accrual incomes, etc. We need to explain here. If we see this critical thinking questions, most probably the journal entries they will ask you, or from that journal only they will ask you to prepare these ledgers, trial balances, etc. If I say this one, write the journal entries in the books of Mr. Sukumar from the following transactions. 2008, January 1st, goods purchased from Raju on credit basis means here the purchases account and Raju's account we have to take into the consideration. Purchases is the real account and Raju is the personal account. Under the purchases, goods are all coming to the organization, debit, and Raju is the giver, credit. So purchases accounts debtor to Raju account. And the next one is goods purchased from Ramu 20,000. So they have not given anything means we will take the cash into the consideration. So purchases account and cash account. Purchases account data to cash account we will take. And goods returned to Raju means so so we have to take here as a Raju account data to purchases account, and goods returned to Ramu means so cash account we have taken previous means. So cash account debtor to purchases account we need to take, and goods sold to Suresh on credit means so Suresh account debtor to sales account, and goods sold to Mahesh means cash we need to consider here, cash account debtor to sales account, and goods returned from Mahesh means so here it is a sales account debtor to cash account we have to consider. Goods returned by Suresh but it is a credit basis means we need to take sales account debtor to Suresh account, and building sold to Venkat that is the cash we have to consider here. Building account and cash account. Building cash account debtor to building account, and furniture purchased from Kishore. Here the furniture is coming to the organization, so furniture account debtor to Kishore account. Kishore they have not mentioned anything means we can take the cash here again. Furniture account debtor to cash account. So like this we can prepare this journal entries with a comment and debit amount and credit amount. Same as this, write the journal entries in the books of Mr. Bhavani Shankar from the following transactions of 2002. January 1st, business commenced with 15,000. So that is capital account. So capital cash account. So capital, it is going to be coming under the capital account. And cash account data to capital account 15,000. January 2nd date, cash paid into the bank means so cash is going out, banks it is coming in. So cash account data to bank account data to cash account. Sold goods for cash. Cash account data to sales goods. Purchases accounts data to cash, because Vijay they had not mentioned credit, so we need here to take the Vijay into the consideration. Machinery purchased account, cash account, machinery account and the cash account. And rent paid, rent is an expenditure, so rent account data to cash account. And depreciation charged on machinery, it is an expenditure for that one, depreciation account and cash account. Depreciation charged on furniture, depreciation account and cash account. These are all we need to consider, and we need to prepare the journal entries. Then same thing, Prepare the journal entries in the books of Mr. Kiran from the following transactions and write the ledger accounts. So here we need to prepare, need not to prepare the journal, and we can prepare directly the ledger. So wherever the insurances is there, from all that one we can round it off, and the debit and credits we need to separate. So here the insurance paid to the paid by check means insurance account and bank account. Telephone rent paid in cash means telephone rent, telephone account and cash account. Stationery account and cash account. Telegrams account and telegrams account and cash accounts. And advertisement charges account and cash account. And furniture account and cash account. Sorry, personal use they have mentioned means furniture account and depreciation account. Not this one, drawings account. Personal use means. Depreciation charged on machinery means depreciation account as well as the cash account. Depreciation charged on furniture means depreciation account and cash account. Repairs paid on buildings means repairs and maintenances plus cash. Rent received for 6,000 means rent and cash. So like this, for this one we can prepare the journal and separately the ledger. Same as write the journal entries in the books of Mr. Shivakumar from the following transactions 2010. January 1st, business started with a cash of 50,000, check of 30,000, furniture of 20,000 and the stock of 20,000. January 8th, goods sold to Arjun on credit for 3,500 and January 9th, goods returned from the Arjun 500. And 10th, Arjun settled his account with an amount of 2,900, that is goods returned. Goods taken by the proprietor for his personal use, that is drawings account and the personal purchases account. Cash taken by the proprietor for his domestic use, that is drawings account and the cash account. Telephone purchased for the domestic use, drawings account and telephone account. And rent paid for personal use, again rent account and drawings account. So for this one, we need to prepare the journal entries. And write the journal entries from the following books of Mr. Prasad for the year 2010. December 1st, machinery purchased, that is machineries account and cash account. Building purchased, building account and cash account. Computer purchased by check for personal use, which means computer account and drawings account. Investment sold for, so investment sold sales account, so sales account and cash account. And sale of machinery, cash account and machinery account. The remaining sale of furniture, cash account and furniture account. Sale of building for cash account and building account. Computer sold by check means bank account and computer account. So these accounts, as per the rules, we need to provide under the journal. Write the journal entries in the books of Gopal from the following for the year 2008. May 1st, business started with 60,000 means cash account and capital account. And salaries, sale of typewriter for 1,000, that is typewriter account and cash account. Salaries paid to staff by check means bank account and salaries account. Wages paid to labor means wages account and cash account, bank account. Rent paid to landlord Raja Rao, that is rent account and cash account. And interest received from Rajani, cash account and interest received. Commission received from Kamala, commission account and cash account. So same as recording the transactions in the Krishna Mohan, that is 2007 June 1st, business started with the cash, checks, interest paid. For all these ones, we need to prepare the journal entries. And sometimes they will ask you directly, they will give you this entries and ask you to prepare this trial balances. For this one, we must have the knowledge on the trial balances pro forma. Based on that one, we can simply segregate that debit and credit amounts. So that is about the short term, long term and critical thinking questions under the Unit 5 of Business Economics and Financial Analysis. For all these problem solving, separate videos are all there, and from the quick analysis of the quick understanding of this terminology, the definitions and terminologies are all there. For the deep learning of this each and every concept, the concept wise videos are all there. So please like, share and subscribe to this channel. Thank you.
Like, share and subscribe. Hit the bell icon for more updates.